Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video I have explained you about accounting policies. Now in this video, few problems, true or false, and some MCQs I'm going to explain you about accounting policies. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject accounting for CA Foundation and watch the videos, theory videos first before coming to the problems. In examination, you may get short questions for CA Foundation, short questions regarding this true or false. So before starting the explanation, take the screenshot of the points, then I'll explain every point in detail. Now, the first question. See the first question on accounting policy. There is a single list of accounting policies which are applicable to all enterprises in all circumstances. It's absolutely false. We have different accounting policies which are followed by different enterprises under different circumstances. We don't have a single policy or few policies which are applicable in all circumstances. So that's what it is saying, same accounting policy. No, never. We have different accounting policies followed by different business enterprises. So this statement is false, that we have single list of policy. It's false. Second, selection of accounting policy doesn't impact the financial performance and financial position of the business. Sorry, it will have a big impact. The accounting policy will have a direct relationship on the performance and the financial position. The items in the profit and loss account and the items in the balance sheet are affected by the accounting policies. So by changing the accounting policy, the variables in the performance statement and the variables in the financial position statement will get changed. So this statement that doesn't impact financial information is wrong. It is false. So simply we can say that accounting policy will have a big impact on the financial performance and the financial position. Next one, a change in accounting policy should be made as and when business like to show the result as per their choice. It's absolutely wrong. It does not depend on the will of the management to change the accounting policy. Accounting policy should be consistently followed from one year to another year. Only under few circumstances the accounting policy may be changed. In which circumstance the accounting policy may be changed? If there is a change in the statute or to comply with the accounting standard or to make the presentation of financial statements more and more better. If the management think that if we change the accounting policy, the financial statement will be more, reliable, more true and fair, then they can change. So only under these three circumstances, accounting policy may be changed. It does not depend on the will or like of the management. So this statement is false, that it can be changed as per the will of the management. No, it cannot be changed as per the will of the management. Only under certain circumstances it can be changed. Choosing FIFO or weighted average method for inventory valuation is selection of an accounting policy. Yes, it is true. Inventory valuation, there are different methods, FIFO method, LIFO method, weighted average method. Now the enterprise has to choose which method of valuation of inventory we should adopt. Whether we should adopt FIFO method or weighted average method. This is nothing but selection of the accounting policy. It is true. Right? Now, selection of an inappropriate accounting policy decision will overstate the performance and financial position of a business entity every time. So whenever there is inappropriate accounting policy, always it will overstate the financial position and overstate the performance. It is wrong. That means when inappropriate accounting policy is adopted, it is not compulsory that always it will be overstated. It may be overstated or it may be understated. Profit may be more or profit may be less. Financial position, assets may be more or assets may be less. Anyway, but here it is saying always overstate. It is false. This is false. Due to inappropriate accounting policy, it may be overstated or it may be understated. Now, multiple choice questions. 3 answers are given, 1 answer is correct. We have to choose the right answer. A change in accounting policy is justified to comply with the accounting standard and law to ensure more appropriate presentation of the financial statement of the enterprise. Third, both A and B. Absolutely right. Both A and B. That means accounting policy change is justified if according to the change in the law or to comply with the accounting standard or to ensure more appropriate presentation of financial statements. In these circumstances only, it is justified to change the accounting policy. Here all the 3 are given: to comply with the accounting standard, to comply with the law, to ensure more appropriate presentation. All these are the circumstances in which accounting policy can be changed. So answer is both A and B. Right. Next one. Accounting policy for inventories of Zeta Enterprises states that inventories are valued at the lower of cost determined or weighted average basis or net realizable value. Which accounting principle is followed in adopting the above policy? This company is adopting the policy of lower of cost price or selling price or net realizable value. Whichever is lower, that method is adopted. That accounting principle is followed. So what factor was considered? Materiality or prudence or substance over form? So this policy that inventory should be valued at lower of cost price or net realizable value, it is based on the concept of prudence. Prudence concept says the income should not be overstated. The income should not be overstated. That's why we should take the lower of the cost price or net realizable value. So this enterprise, this Zeta Enterprise is following prudence concept in making this method of lower of cost or net realizable value. Now, the areas where different accounting policies can be adopted for. In which area different accounting policies are there? Providing depreciation or valuation of inventories or both the options. So different accounting policies are there in case of valuation of inventories. Next, selection of inappropriate accounting policy decision may. Now carefully, if we make inappropriate accounting policy decision, then what will happen? Overstate the performance and financial position of the business entity, understate or overstate the financial performance and financial position of the business, or overstate the performance of a business entity. Just now I told you, if we make inappropriate accounting policy, then the performance and the financial position may be overstated or it may be understated. Anything can happen. Overstate or understate of the performance and the financial position. The performance we can know by preparing profit and loss account. That means profit may be overstated or profit may be understated. Similarly, financial position may be overstated or may be understated. That means assets and liabilities may be overstated or may be understated. So answer is B. Last question. Accounting policies refer to specific accounting principles, methods of applying those principles, both A and B. In the last video, I have explained you the meaning of the term accounting policy. Again, I repeat, accounting policy is the specific accounting principle and the methods of applying those principles by an entity in the preparation and presentation of financial statements. So accounting policy means two things. First of all, specific accounting principles. Secondly, methods of applying those accounting principles. So both will come under the category of accounting policies. So here accounting policy means principles of accounting and also methods of applying those principles. So both will come under accounting policies. So both A and B. So C is the right answer. That's all. So in these two videos, I have explained you about the meaning of the term accounting policy, what will be the impact on financial position when the accounting policies may be changed. And in this video, few questions I have explained. So after watching these lectures, these videos, definitely you will get a good command. With confidence, you can face the examination of CA Foundation or CMA Foundation or CS Foundation. So if you are satisfied, give a like to the video, share my channel, subscribe if you have not yet subscribed, give your comments. And by the super thanks which is given below my video, inshallah we'll continue the next chapter, that is chapter number 6 in the next video.